Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hello everyone, my name is Nihita Sharma and I'm part of entire marketing team at ITI Mutual Fund and I will be the moderator for the day. Along with me, I have Mr. Zain Sheikh, who is a colleague of mine from marketing team. Very warm welcome to all of you to the launch event of ITI Value Fund. We are quite excited to connect with all of our esteemed partners across India.
Hi Nihita, and warm greetings to all our esteemed partners, and we sincerely hope that you and your loved ones are safe. So, on this launch event of ITI Value Fund NFO, we bring together a panel of industry veterans who can give insights on the business situations, shed light on the market outlook, and prospects of this NFO.
We have got an action packed day for you, and without any further ado, let's welcome our National Sales Head, Mr. Vikas Rathi. Mr. Vikas Rathi joined IT Asset Management in February 2019 and is responsible for entire sales and distribution function. He is a seasoned sales and business development professional with more than 2 decades of experience in channel sales, distribution management, business development, key account management, profit center operations, and team management. His last assignment was at Reliance Nippon Life Asset Management Limited, Mumbai, as Vice President and National Head B15 Emerging Markets. In this role, he was responsible for the sales and business development of 150 branches across the country. Prior to this, Mr. Rathi was instrumental in driving sales and business development in various large organizations pertaining to sectors like telecom, insurance, and logistics. He is a postgraduate diploma holder in management from IMT Ghaziabad and a BE in computer science. I request Mr. Vikas Rathi to address our partners. Thank you, and over to you, sir.
Thank you, Neeta and Zen. It is really heartening to see that our partners have been continuously supporting us in the last 2 years. Indeed, today is a very special day for us because we are connecting with all our esteemed partners virtually after few months. I'm really overwhelmed with the response that we have received from our partners, and I welcome all of you to this grand event. As we complete 2 years of our existence, it gives me immense pleasure to announce that we are now serving in 43 locations across India. We have more than 13,000 partners empaneled with us, and as we had committed at the start of our journey, we are already present with our own branches in 25 cities. We have already launched 11 products in the market, and this would be our 12th product launch. We are coming up with a lot of digital innovations for our partners so that in the new normal, they are better equipped to do their business smoothly with us on a day-to-day basis. We all know that all of us have been going through very turbulent times because of the pandemic. To surpass the uncertain times like this, you just need two things. One, a fund that offers great value with limited downside risk and has the potential to create good risk adjusted returns in the long run, which in my mind is ITI Value Fund at this juncture. Secondly, we need someone who can help you to unlock the hidden value, has an outstanding track record in spotting great value stocks, and has created wealth for investors.
About outstanding track record and someone who can spot great value stocks, I would now like to welcome our CEO and CIO, Mr. George Haber Joseph, to join the panel for discussion. Mr. George is a qualified chartered accountant and a cost and management accountant. George has around 2 decades of experience and has held position in equity research, fund management, treasury management, and management consulting. Prior to joining ITI Asset Management Limited, he has worked in various reputed companies. His last stint was at ICICI Prudential Asset Management, where he spent more than a decade managing some of the large flagship fund strategies in equity and hybrid categories, with asset under management exceeding rupees 10,000 crores. All funds managed by him during this tenure were excellent performers in their respective categories. He is known for his focus on extensive bottom-up research and stock picking capabilities, has overseen fund manager activities, managed various research analysts during this tenure.
Thank you, George, for joining in and addressing all our partners at this launch event. Most of our partners are quite eager to know why ITI Value Fund NFO at this juncture.
Thank you, Vikas and Zain, for the introduction. Good evening, everyone. It is a great pleasure to be hosting all of you in this historic digital event. Markets are at all-time high levels. Liquidity is unprecedented. Economic outlook is improving with vaccines coming in. So investing at this juncture needs a special strategy which can help the investors spot the hidden value in the market and also create long-term wealth. Legendary investors Value investors like Benjamin Graham, Warren Buffett, and Charlie Munger have massively influenced our SQL investment philosophy and helped me in a big way in spotting hidden value in the market over these years. Good part about value investing is that we are buying with huge margin of safety. Therefore, the odds are clearly in your favor. Interestingly, at any point of time in the market, there will be few sectors and stocks which are unpopular and offering great value investing opportunities. The polarization and valuation differential between expensive stocks and attractive stocks are at one of the highest point I have seen in the last 2 decades. Even in the last few months, you all would be knowing there are stocks and sectors that have not done well because of the pandemic scare, which has created price value gaps. So ITI Value Fund will be embarking on a unique opportunity to buy a bunch of very attractively valued stocks which can do well in the next 3 to 5 years time and avoid the expensive ones. Now I would like to introduce two very distinguished gentlemen who are an integral part of ITI Mutual Fund.
So from the board of directors of ITI Mutual Fund Trustee Company, we have with us today Mr. Naushad Panjwani. Mr. Naushad Panjwani is the founder and managing partner at Manduras Partner, focusing on cross-border mergers and acquisition transaction advisory. He has served as a senior executive director for Knight Frank India and is a member of the Institute of Chartered Accountants of India. Naushad sir, welcome, and it is a pleasure to have you here in this launch event representing the entire trustee board members. From the board of directors of ITI AMC, we have with us today Mr. Pankaj Bhuta. Pankaj sir is a founder of Messrs. PR Bhuta and Company Chartered Accountants. He has more than 39 years in practice and has a rich experience in the field of foreign exchange regulations, corporate valuation, direct taxation, international taxation, transfer pricing, audit and assurance. He is associated with ITI Group since July 2013. He is a fellow member of the Institute of Chartered Accountants of India. Pankaj sir, it's a pleasure to have you here with us today.
Gentlemen, it is a pleasure to have you here at the launch event of ITI Value Fund NFO. Coming to Naushad Panjwani sir, as the trustee director of ITI Mutual Fund Trustee Company Private Limited and knowing the AMC from close quarters, I would like you to give your perspective on the fund house for the benefit of our partners.
Thank you, George, for having me here today. I'm very happy to be associated with the ITI Trustee Board, and I'm excited to be part of this launch event. I believe the people, processes, and the regulatory framework at ITI AMC is very well set, which would enable the firm to grow in a stable and consistent manner.
Naushad sir, being an expert in finance and a stalwart in the investment management space, can you throw some light on value investing and how it can benefit our mutual fund partners and investors?
Value investing has huge potential, and it is proven in the Western world. The good part about this investment style is that you are buying stocks at very attractive valuations. They are the most relevant part in investing, which is really the most important part. Investing into these kinds of funds can potentially limit the downside and also can create very good long-term value creation, wealth creation experience. Having allocation to such funds can be very rewarding.
Naushad sir, with your long-standing experience in mutual fund space and being part of the ITI trustee board, can you share some tips with our partners to enhance and grow their business?
My learning is that if you give honest financial advice consistently to an investor, your business becomes disruption proof. The trust factor can be built over many years, but can be lost in a jiffy. I personally feel there is a big scope of improvement here, which can help you differentiate and grow the business. So I'd say stick to honest financial advice because it is rare and very few people do that.
Thank you, Narshat sir. So, Pankaj sir, as the director of ITI I would like you to share your perspective on that readiness of our AMC from regulatory as well as long-term stability point of view, and how comfortable you feel about the overall structure.
Yeah, thank you, dear George. First, let me congratulate you as well as whole team for putting up this virtual event. Thank you for inviting me in this virtual event. I am quite happy to be a part of this NFO launch event. Being on the board of the ITI and the pleasant experience which I have till now, I can say with a lot of confidence that the regulatory framework has been well established, and most importantly, I believe that the rigor at which the entire team is working, it will definitely take the overall business a long way.
Yes, sir. So, Pankaj sir, how do you see the mutual fund industry shaping up in the next decade? And also the role of mutual fund distributors or investment advisors in the long run?
Hmm. Yeah, with increasing awareness and growth in disposable income, the mutual fund industry will grow leaps and bounds. As per the latest studies, it is very clear that in the next decade, the overall industry size can be anywhere between 90 to 100 lakh crore rupees. And I also believe that the role of a mutual fund distributor as a and as well as an investment advisor is bound to go up disproportionately in the years to come. Embracing technology can be a big enabler of mutual fund distributors to scale up and help the industry grow.
Dear Pankaj sir, today we observe many investors are redeeming their money from mutual funds while the retail participation directly goes into the stock market and has increased substantially. What would be your advice to the mutual fund and the distributors to bring these investors back to the mutual fund industry?
I believe that the individuals who are trading directly on their own in the stock market can be looked as the prospective client base. We have seen such trends during the early 90s and the early 2000s, as well as also during 2007 and 8 periods. In a roaring bull market, people feel that they can make daily, they become overconfident, and subsequently, whenever there is a increase in volatility, many of them they suffer huge losses and they withdraw from the market. So mutual fund distributors today have the technology and digital infrastructure to enable transactions and advise on the right asset allocation and the right portfolio mix. The distributor community should capitalize on this advantage to expand their client base. Individual investors they are not well equipped to take a overall view. They generally guide, they get guided by tips which is floating in the market. So where these distributors can give honest advice.
Thank you, Pankaj sir, for your esteemed presence and your valuable inputs.
It gives me immense pleasure in welcoming our next panelist, a man who needs no introduction. Ladies and gentlemen, please join me in welcoming the Chairman and Associate Director of ITI Mutual Fund Trustee Private Limited, Mr. Sudhir Walia. Mr. Walia is a member of the Institute of Chartered Accountants of India and carries more than 4 decades of experience in taxation and finance. He has been a director of Sun Pharmaceuticals Industries Limited since January 1994 and he was instrumental in listing of the company. He has been associated with the company since then and has played a pivotal role in the excellent growth and profitability of the same over the last 2 decades. He is also on the board of Taro Pharmaceuticals Limited. He was awarded the CNBC TV18 CFO of the Year in the pharmaceutical and healthcare sectors for 2 consecutive years, 2011 and 2012. Mr. Sudhir Walia has a patent in his name for financial structuring of a transaction. He has also been awarded the Adivasi Sevak Puruskar 2008-2009 by Government of Maharashtra. George sir, over to you.
Sudhir sir, it is a pleasure to have you here with us today. Sir, when I look back at the time we launched ITI Mutual Fund in April 2019, and we have completed 2 years of operations, what is your vision for ITI Mutual Fund in the coming years? Over to you, Sudhir sir. You can unmute and talk.
Yeah, thanks, George. First of all, I would like to congratulate George, you and your team for ITI Wealth Solutions. I will say it is ITI Mutual Fund has created a significant amount of cross the milestone of 1,500 crore. I always said in past that 1,000 crore collecting AUM is a challenge, which in fact you surpassed in a period of less than 2 years, and we reached to 1,000, cross even 1,500 crore. I really appreciate George and your team for dedicated work, and I appreciate the passionate and the experience all of you have is admirable. So this is an achievement which I will never forget. I'm coming to the in coming years we would like to have a differentiated offering product to the investors with a more transparency and ease of operations, where they feel that they are taken care with their investment and would like to see that their wonderful experience over a period of time working with us. We are also very committed to the business and we are here for a long term. We have significantly invested in infrastructure, we have invested in technology as well as on the people. We have not spared single stone to ensure that the talent which we acquired is the best in the industry. And I'm very sure that they will definitely satisfy the customer's need. I am happy to say that ITI Mutual Fund is quite experienced and has a process oriented. We have a risk framework which will take care of the business where we can reach to a significant height, time to come.
Thank you, Sudhir sir, for your continuous support and belief in the team. We have around 13,000 partners empaneled with us with ITI Mutual Fund over the last 2 years. And what is the message that you would like to give to our esteemed partners?
At the outset, let me thank all my partners where we have the total valuable support and contribution extended to us by them in last 2 years. It is really remarkable support which we got it throughout my career, that always we should have a growth with the distributors. Our journey of growth will come along with the distributors. And we are here to support them in distributing their product which they are doing by manufacturing the product which is valuable and which rewards to their investors. So I personally consider that ITI Mutual Fund, we are looking forward for their continuous support and associate and partnering with.
Thank you, sir. I would request now Mr. Naushad Panchwani, sir, to officially declare the launch of ITI Value Fund.
We have full faith in George and his team, and we are there to support you in every way possible. And I'm sure the team will do an excellent job. Listening to all the statistics that have been given so far in terms of number of partners and the AUM, I'm truly impressed by the progress made. I believe the strategy would pay off the investors in the long run. Congratulations to the entire team of ITI Mutual Fund, and I hereby declare the launch of our NFO ITI Value Fund. Congratulations.
Thank you.
Yeah, ITI Value Fund, an open-ended equity scheme which will follow value investment strategy. The NFO starts on 25th of May and ends on 8th of June 2021. The key communication which we want to put forward in this product is unlock the hidden value. Unlocking the hidden value, finding the value picks and buying into this fund and creating wealth for the investors is the key thought behind this product. Why equity as an asset class? All of you know that equity means, when you buy an equity share, you are owning a business. Therefore, you can grow with the company, you get dividends. Therefore, the ownership in the business is what you get by buying equity shares. Most of the stocks are listed on the stock exchanges, and there is a significant transparency that you get out of equity investments, unlike real estate and many other non-transparent asset classes. The wealth creation is pretty much simple. If you buy a business which can grow from a long-term perspective, hold on to it, and eventually when the company grows, you create a lot of capital appreciation as well as dividends. You can diversify the risk across sectors, participating into various businesses in different sectors. Excellent long-term returns are provided by the equity as an asset class, which is visible in the way the Sensex has moved in the last 40 years. In 40 years, Sensex has multiplied 520 times. You are investing in India. India is an emerging market, strong demography, young population, entrepreneurial mindset is there. Therefore, you can participate in the India growth story. And also this asset class helps in beating the inflation, which is very, very important. When you compare against various asset classes, also gold, real estate, and national savings certificates, fixed deposits, and also the public provident fund. This particular asset class, even though it is a little bit more riskier, but at the same time, it has given stupendous results or returns in the last 12 years. Since 2008, the compounded annual growth rate in equity assets is around 22.95% if you compare the Nifty 50 as the main broad-based index. There is no need to say that equity and asset class has been performing very well in the last many years. As I mentioned, how the Sensex has compounded. If you compare against the debt fund, obviously the equity as an asset class has outperformed massively. I want to give a difference, clear difference between volatility and risk. What do you mean by volatility? Volatility is a sharp movement in price points of stocks or different investments that you make in the short run because of some sentiment impact, some systemic events, or country related or sector or company specific events. But this volatility always creates an opportunity for an investor who looks at the valuation and buy into it whenever the stock prices are correcting. Whereas risk is actual loss of capital which can happen because of the business deterioration, the dynamics of the management changing, and poor investments or capex the company is doing. The company can actually showcase losses, which is the loss of capital, which is the real risk that you carry. When you buy at a high valuation, you run the risk of losing the money. For risk is actual loss of capital, which can happen over a period of time because of various reasons, whereas volatility is the movement in prices, which ideally doesn't mean anything. Volatility has to be a friend of a smart investor because you can buy at a very attractive price points because someone is selling aggressively for no reason, and you have to reduce the loss of capital, which is a risk. The question you will have in your mind is it the right time to invest in equities? Because markets are running high, and we have heard about COVID second wave, and is this the time to invest in the markets? This is a question everyone will have. What you have to remember is that markets or economy goes through cycles. It will go through the up cycle and as well as it goes through the down cycle. If you look at the economy as such in India, last 10 years has been a significant down cycle. From 2010 onwards, economy was going through a rough patch, and in between, government has taken a lot of strong reformatic measures, which are also impacted in the near term, be it GST, RERA, demonetization, tax cuts, various things. When you look at the key economic scenario at this time, IIP, Index of Industrial Production, which is the barometer for the industrial activity, which is the rock bottom level, bottom of the economic cycle we are running in, because the corporate profitability to GDP is at a 20-year low at a 2%. GDP growth can accelerate 2 quarters in September quarter last year as well as the December quarter. We have seen the earnings growth acceleration, and even March quarter is not very different. Therefore, after 12 years, we are seeing the earnings growth or GDP acceleration happening. Low credit growth, and also a lot of stocks are very, very cheap. Broad market is reasonably cheap. Only narrow rally we have seen in the large caps and few mid cap stocks, but otherwise, broad market is very, very attractive. The vaccination is available. A lot of vaccines have come in, and it is actually very helpful for protecting yourself from COVID, which means that the economic rebound is definitely going to happen. Now, coming to value investing, you can't forget the names of Mr. Benjamin Graham and Charlie Munger. Benjamin Graham is considered to be the father of value investing. What he has stated is price is what you pay and value is what you get. Price is the market price. This is the price that you pay, but at the same time, what value you get is what a value investor will look at. Say 100 rupees is the value that you are getting, and the price that you have to pay is only 30 rupees. So the margin of safety or the safety factor that you're building in your buying is almost 70 rupees. So if it goes back to 100 rupees, you make a lot of money. So that is the key quote which we would like to put it here. Now coming to Charlie Munger, who is the associate with Warren Buffett at Berkshire Hathaway, who has created an amazing track record of building wealth for investors as well as for the company as a whole, just by buying good businesses at a very attractive valuation and holding on to it and seeing the compounding effect. If you see what Charlie Munger is saying, value investing never go out of style, because value investing is always wanting to buy or get more value than you pay for when you buy a stock. That approach will never go out of style. I think all good investing is value investing. It's just that some people look for value in strong companies and some look for value in weak companies. Every value investor tries to get more value than he pays for. Let's look at what are we looking for in the value investing. When you're looking at a company, we look at the company's earnings power, how much the earnings or the profits of the company can grow over the long term, how good the management is, how sound the promoter is, what is the return ratios, the ROEs, return on equity or return on invested capital, and what is the debt level in the company. But at the same time, it might be a great company growing, but you have to pay the right price. For what discount that you are getting at the current market price from the intrinsic value of the business. And ultimately, the business has to be very, very simple. Otherwise, nobody will understand the business. Let's look at the universe that we are looking at. What all can be fitting into the value fund. So one is the special situation stocks. Some companies go through special situations like mergers, spin-off, demergers, and you will see emerging themes available. Some underestimated moat, that is the advantage, or the company might be having a patent, or the company will having an R&D capability which is not known today, but if you do research, you will come to know. If the sector is going through a significant down cycle, as I was mentioning in the last 10 years, many sectors were going through that. We'll look at those sectors very favorably and hunt for the good stocks, value stocks in that. Challenging environment always gives you a lot of opportunities. Today we are in a challenging environment. There is no need to say because of COVID second wave. And also the idiosyncratic issues and negative news throws a lot of opportunities suddenly. Like flash crash in US, which is read about, suddenly gives you a big opportunity to buy into great companies. Now, let's look at the intrinsic value what do you mean by intrinsic value? It's a, you have in a company a lot of assets in the company, you value that assets, a lot of intangibles like goodwill, patents, so and so forth will be available in that company, you value that. Then the company's growth path, if the company is going to grow materially in the many years, then you have to look at the, what is the growth premium that we have to attach to the business, because the company is going to grow 20 years from now, and then there is a huge compounding it can create. So you have to add all these, and then you arrive at the intrinsic value of the business. Now, if the company doesn't grow, then the first two is good enough. Value of assets and intangibles, goodwill, and patents and all is good enough to look at. Now, key aspects of value investing, as I mentioned earlier, the intrinsic value assessment is very critical, which is done by the research team. The margin of safety evaluation, how much is the cheapness or attractiveness at which I am buying a company's stock, promoters pedigree, current valuations, and also the quality of the business. Now, when we say margin of safety, many people don't really understand what it means. It means that if you see the green line, it suggests the intrinsic value of the stock. Say 100 rupees is the value of the stock. The stock price currently is trading, say, on the top, if you see the arrow on the top, it suggests that the stock is trading at, say, 150 rupees. So when you buy at 150, there is a very good chance that it goes to 100 or below that. Therefore, that is not the price to buy. When the stock corrects massively, and if you see the bottom, the red line on the bottom, say for example it is at 30 rupees. For 100 rupees stock, when you're buying at 30, the gap between 100 and 30 is called the margin of safety. If you look at our investment philosophy itself, the SQL, margin of safety, is S, quality of the business and low leverage, which means you have to buy things cheap. Now, presenting ITI value fund. Why invest in this fund? What is very good thing about it? You would have heard about Warren Buffett, who has made his wealth, and over these years, and he has become one of the richest man in the planet. If you look at Warren Buffett, what he keeps saying is, be fearful when everybody is greedy, and be greedy when everyone is fearful. So when he came to Delhi, he clearly mentioned about this, and people asked, how did you make so much of wealth? He said that every 10 years you get a big sell-off period, which is called a bust period, when everything is falling off the cliff, and that time you have to be brave enough to buy into the stocks. Like say March 2020 is one of that periods what I can relate to. And he said these kind of incidences will keep happening every 10 years. One big sell-off period and one big boom period where everything goes up. When everything goes up, you peacefully sell into the boom and you buy into the bust. So we have seen 2008 as a bust period where post Lehman crisis markets were extremely cheap, which is circled here, and mid cap bubble, which we saw recently in 2018. After that, mid cap stocks corrected massively, and the pandemic outbreak which happened, and because of which market correct. So there is a lot of incidences which we can relate to. So you have to buy into very, very cheap scenarios. Now look at the sentiment which can impact. Various sentiments impact and segments of the market goes through painful period and very exuberant period. 2012, 2015 is the period where actually metal stocks did very, very badly, and post that metal stocks did well. And pharma stocks between 2015 to 20 was going through a tough phase because of FDA action as well as various other things and company specific issues also. And post that, the stocks started moving up. If you see, these all becomes a good value investing hunting opportunity which comes on your way. In the year 2000, we have seen IT sector going through the massive boom period and then it collapsed. So opportunities will keep coming in. And this is where the opportunity lies. When it is trading below the fair value, fundamental value, that's when you buy, and when it is above the fundamental value significantly, you sell. So the price distortions you have to keep an eye on. I would like to take you through few case studies. One is Nestle, which is a well-known stock, consumer goods company, staples company, which is into dairy products and various other leading consumer goods they manufacture. They faced the mercury issue in their Maggi product. Maggi, everyone knows. For Maggi is a product where mercury was present, and in 2015-16, actually the stock corrected massively. And since then, if you had bought stock at that corrected price, you would have made tons of money. So when the stock is available cheap, a great company available very cheap, that's when you buy into that stock. Look at IPCA Laboratories. IPCA Laboratories has been a fundamentally strong company over many years, but in 2016, because of the US FDA action as well as the global tenders, global funds also debarred from their exporting, the company's stock tumbled down, and from $1,200 it went down to $400, and it gave a brilliant opportunity for a value investor. And if you had bought at $400 in 3 years' time, it has become $2,500. So this is how the stock price moves. If you have to identify the good company, whether it is trading very cheap and you buy into it and you make a lot of money. Same thing happened in the case of Infosys when Vishal Sikka resigned as a CEO in 2017 August. The stock came tumbling down. Infosys, it is one of the largest employer in the country with more than 2 lakh employees working with the company. And it is a fundamentally very strong company with a lot of free cash flows generated. But it went through a tough period in the year 2017. As an investor, what do? You go and buy the stock at the very attractive price and then hold on to it till the sentiments or the noise around or the clouds to settle. Then eventually you make huge money. Pharma sector, as I mentioned, it was a difficult period 2015 to 20, which is now reversing. And I believe that there is a huge scope for the sector to do well in the coming years. Building materials, till 2010-11, nobody used to think about building materials as a good compounding story. Even though their earnings were compounding, they never thought that there is a brand associated with this company, be it Kajaria Ceramics or various other companies are there in the sector. But eventually, when the earnings compounded 40% CAGR between 2009 to 13, and eventually it recouped very well. So if you see the re-rating potential of these companies and earnings CAGR, it surprised many people in the market. And I think this is typical case of value investing. Mid and small cap IT names, even the recent times, just 1.5 years back, most of the stocks were trading at 8 to 10 P. Today, most of them are trading at 25 P to 30 P. So when you get a very cheap valuation, buy into it and wait for things to normalize or the growth to, when you buy it is a no growth price to earnings multiple, and eventually you sell it when things are looking rosy. Why ITI value fund? We believe that the product features are pretty brilliant. The sector allocation is going to be driven by 2 factors. One is the macro drivers and plus the attractiveness of that sector. We think that the normal horizon that you need to have is 3 to 5 years. The large caps, we will keep a 7% limit at the time of buying, and mid caps 5% and small cap 3%. And value investing across market caps is possible in this. The advantage of the product, you are looking to buy very attractively valued stocks and not expensive ones. That itself is the key tenet of investing. And we look at improving cash flows and return ratios and good quality franchise. And also we might be buying when things are not looking that great and might be unpopular at that point in time. And that's where the value lies. The product advantages, when you buy at a significant discount, obviously your margin of safety is very high, which itself means the relative downside in this product is quite low, or and upside can be very high. We might look at turnaround cases and it can be we think that long-term value creation is what you should focus on, and re-rating potential of the company's multiples as well as earnings growth will add to the value. Who should invest into this fund? There are many equity funds in the market, and people get confused, where to put money. There's large cap, mid cap, small cap, and multi cap are the 4 broad categories, if I may put, and then tax saving funds to that extent. So you might say that why should I invest in this fund? The best part is that in the equity portfolio that you run for an investor, this can be very handy because this will be less volatile product and it can give disproportionate returns in the long run. But you need to have patience of 3 to 5 years. And if you have, the investor has that kind of waiting period and risk appetite, then this product becomes very handy. So it can be a good value add to the normal large cap, mid cap, small cap kind of portfolio that you run, or a multi cap portfolio kind of run. Here you are buying with a very clear theme in mind, and therefore it can be interesting for investor. What are the key learnings that we have? Mr. Pradeep Gokhale, head of equity, is going to be one of the fund managers, and Mr. Rohan Kode is the fund manager for this product. They together will be co-managing this product. What we clearly understand from this value investing philosophy, or the learnings of ours, is that the more irrational market behavior, the greater opportunity for a disciplined investor. Because markets can be irrational in the near term, but in the long run, it will track earnings or the growth of the company. Never overpay for any idea that you buy in this fund. That itself minimize the downside risk, as I mentioned. You need to have a contrarian thinking. When everyone is running behind one stock, don't run behind that stock. You have to think differently, and that is where the biggest challenge a fund manager face, because you feel like going behind the crowd, but crowded space are always narrow, and as Charlie Munger put it rightly, you run through you go the highway, not the narrow way. So highway is always less crowded, so that the opportunity is very big. Two principal reasons why the stocks become very cheap is one, the disappointing results in the near term, and the protracted neglect or the unpopularity the stock normally has. Value investing needs a sound intellectual framework. So we have put a very strong process at ITI Mutual Fund to identify hidden value, as well as the SQL investment philosophy is overarching on that, and look at not pay anything higher, don't buy expensive, buy cheap stocks, and wait it out and look for the compounding. So the higher the price you pay today, the lower the return will be tomorrow. The strategy of value investing, as I mentioned, buy good quality companies, attractive valuation, potential bounce back in earnings growth, and earnings growth as well as the multiples. The investment process, three-pronged process. One is the bottom-up stock selection is key, which stock to buy, and the top-down, which themes are going to emerge and which are the tailwinds that you're going to get from the government policies as well as macroeconomic orientation, and as well as the eligibility of the portfolio universe. We look at various valuation metrics before identifying why to invest in a particular stock. The risk management framework is pretty nicely set at ITI Mutual Fund. We have a risk manager named Mr. Harish Iyer, who has joined recently, and with a lot of experience in the mutual fund space. He'll be taking care of the risk management part, continuous monitoring of the internal limits as well as the SEBI limits, and periodic positioning and sizing. And along with that, we have a fantastic research team who will support us in the fund management. For diligence, screening and evaluation of stocks is pretty clear. SQL is our investment philosophy, which very clearly that margin of safety is S, which is buying cheap, good quality of business. The company is having patents, company is having entry barriers, pricing power, and have good market share in the marketplace. All of them are good quality businesses with a good return ratios. And low leverage means low debt companies. The investment style as a house, ITI Mutual Fund, we believe in GARP style, which means growth at reasonable price. We are not growth at any price kind of investors. What will be the investment? As I mentioned, wherever there is a problem, we will look at that problem, whether it can reverse. It's a macro headwind, it's a China trade war, or it's a dot-com bust, or it could be anything, or infrastructure slowdown. All these can be a hunting ground for value stocks. And eventually we look at any management restructuring or business restructuring happening, there can be good value emerging. We look at all these things, and especially bottom of the economic cycle. As I mentioned, the last 10 years has been a significant down cycle. A lot of value stocks automatically emerge. look at it very seriously and buy into it, it can potentially give very good returns. We think that a lot of stocks in the banking space, mid and small cap banks, in the building material space, in the engineering and industrial product space, are looking very attractive. In pharmaceutical space, we think that all can be looked at very seriously. Now, coming to the investment team, the structure is that I head the mutual fund business. I'm the CEO and CIO. We have with us Pradeep Gokhale, who is the head of equity. He's having 27 years of experience, more than 25 years of experience, and Mr. Vikrant Mehta, head of fixed income, who has recently joined, and he is having more than 2 decades of experience. Balasubramaniam, who is the compliance manager, Mr. Harish Iyer, who is the risk manager, dealing team, and Mr. Madhur, who is quantitative strategist, who is from BTech from IIT Mumbai. We have the research team includes Rohan, who is fund manager and also looks at various sectors in consumer durable space and FMCG and auto ancillaries. Pradeep Agarwal, Bhavesh Jain, Ayushi Garodia, Hetal Gara, and Sahil Doshi. We have three-member dealing team at this point in time in equities. ITI Value Fund, the NFO opens on 25th May 2021, closes on 8th June 2021. The benchmark is Nifty 500 Value 50 Total Return Index, and the minimum investment amount is 5,000 rupees and in multiples of 1 rupee thereof. The fund managers, as I mentioned earlier, Mr. Pradeep Gokhale and Mr. Rohan Kode. Exit load is 1% if redeemed within 12 months' time. There will be direct as well as growth and regular options. Direct plan and regular plan, and growth and dividend options. This is the compliance disclaimers and riskometer. Thank you. And now coming to my team, now I would like to invite Mr. Pradeep Gokhale and Mr. Rohan Kode from the investment team. They have been an integral part of the AMC since inception, and they will be managing ITI Value Fund. I request Mr. Pradeep and Rohan to join the panel.
Right. So talking about Mr. Pradeep Gokhale. Pradeep Gokhale is working with us as head of equities. He has joined ITI Asset Management Limited in November 2018. He has over 2 decades of experience in fund management, equity research, credit evaluation, and ratings. He's a qualified chartered accountant and a chartered financial analyst from CFA Institute. His last assignment was at Tata Asset Management Limited for 15 years, and his last role was in the capacity of Senior Fund Manager Equities. In his last stint, he has managed a broad spectrum of schemes. He was responsible for heading the equity research function and also for tracking various sectors and stocks. Prior assignments include profiles in some of the large companies in the financial services and manufacturing space. Talking about Mr. Rohan Kode, he's working with us as a fund manager. He is a Bachelor of Commerce and an MMS from Mumbai University. He comes with a rich experience of over 16 years in equity research. Prior to joining ITI AMC in June 2019, his past assignments have included tracking multiple companies in sectors like auto and auto ancillary, industrials, and mid-caps in various prestigious organizations. So thank you, Pradeep sir and Rohan, for joining us today for this event. So Pradeep sir, we have a very strong investment philosophy where time and again we've been talking about our fund management process at ITI Mutual Fund. So sir, why don't you explain its benefit in brief to all our partners, and especially how it is relevant for ITI Value Fund?
Yeah. Thank you, Zain. So our objective at ITI Mutual Fund is always long-term wealth creation. And the entire investment philosophy that we follow is focused to achieve that objective. Ultimately, in investments, success comes over the longer term by buying fundamentally sound companies, which we have to identify through a rigorous research process and buy them at appropriate prices. So to achieve that, we look at 3 factors, and therefore our investment philosophy is named SQL. First factor, S, stands for margin of safety, Q for quality of companies, and third is low leverage. So quality of any company, we can look at the longer term track record in terms of return ratios, and also in its product market, in its underlying business, what is its market position, not in stock market, but in the product market. The other part, margin of safety S, which means the difference between the intrinsic value of the company, which George talked about in its presentation, versus its current market price. And this concept very closely related to the value investing part, because in value investing the basic tenet is buy stocks which are very attractively valued, or where the gap between intrinsic value and its price are very high. And third factor is low leverage, which means companies which have low leverage can survive the downturns better, and also they can invest for their growth. So entire our SQL investment process is very closely linked to the concept of value investing, because one of the major factors is the margin of safety or the price value gap.
Right. Thank you, Pavitra, for that valuable insight on the entire research framework and SQL philosophy that we have. Moving on to further questions, we have received a few questions from our partners, especially requesting to explain the research process which is followed at ITI Mutual Fund. So, Rohan, why don't you quickly touch upon the same, which can give a deeper insight on our research process?
Thank you, Zen. So the focus of the research is on bottom-up stock selection and in finding the intrinsic value of the business that we would invest in. The effort is to identify the key value drivers for each industry, the companies that we track, and the key risks associated with its business. The research process involves studying the long-term financial history of the company in terms of management strategies, sales growth, margins, capital allocation history, and also the longer-term valuation bands at which the company has traded in the past. We track approximately 450 odd companies and arrive at near-term and long-term fair values. For arriving at the fair values, we make specific assumptions and forecasts of companies' sales, margins, profitability for the next 2 years. We also analyze the current business cycle and apply appropriate valuation multiples. This process provides a risk-return framework very clearly.
Right. So thank you, Rohan, for that insight. My next question will be to George sir. George sir, markets are at all-time high. Do you see value opportunities at this juncture? I mean, how do you see it at this juncture? And can you throw some light on ITI Value Fund NFO collection deployment strategy?
Hi Zen, markets have been going up the last 40 years. There will be blips in between, because of global uncertainties, like what we saw in the case of dot-com bubble bursting in 2000, or in the year 2008 when we saw the Lehman crisis, the subprime crisis breaking out, and also we saw the pandemic crisis in the March 2020. All these occasions, because of global reasons, markets corrected. And whenever you get these kind of opportunities, you have to jump in and buy equities very significantly, and that's the only thing to do, because India is a growing market, strong demography, and it can grow for many years together. So the rally what we have been witnessing in the last many years is only a narrow rally, because the economy was not doing well. Therefore, a few pockets like consumer facing companies were getting huge valuations, because they were able to grow and in this kind of situation. Therefore, the market rally has been very narrow. I see reasonably very attractive value opportunities in the cyclical sectors like banking, auto ancillary, even some of the commodity stocks and utilities and infrastructure related companies, construction, industrial products. All these sectors are seeing significant value opportunities, and that is something which we will be clearly having an eye on. As per our internal investment framework, whatever we collect at the time of NFO, we have to deploy at least 90% within a year's time, in a month's time, and that is the regulation speaking from SEBI. But however, in the case of ITI Value Fund, we would invest only when we see a very attractive value opportunity emerging, and we will latch on to it in a big way as per the risk limits what we have fixed. So we think there is a huge opportunity even at the current juncture. And recently, the banking sector has gone through a significant downturn, and we believe there is an opportunity there as well.
Thank you, George sir. I am sure that gives a lot of confidence to our partners and our viewers watching us live on YouTube. So, sir, my second question will be whether stocks with low price to book value or low price to earnings multiple would be your investment consideration. And if yes, can you name few sectors which are offering value at this point in time?
Yeah, value investing doesn't mean buying statistically cheap companies in terms of low price to book value or low price to earnings. Instead, the fund would look to buy great companies at attractive valuation, which means the book to price to book value may or may not be very low. Every sector will have some dynamics, and the value opportunity has to be looked at from the sectoral dynamics point of view, and also look at whether it is unpopular and can be embarked on. In today's times, mid and small cap private banks, PSU banks, few pharma companies, few industrial manufacturing companies, capital goods and engineering companies, all are looking good hunting ground for value stock picks.
Thank you, George sir. My next question will be to Mr. Pradeep Gokhale. Pradeep sir, what kind of returns can an investor expect while investing in ITI Value Fund?
So for the value fund, because of a strategy, the longer term return should be very robust. And also another point I would like to highlight is the downside risk also would be relatively low. There are two reasons. One is the fund will invest when the price value gap or the intrinsic value and the current market price gap is very high. And the other part is the fund will have a flexi cap strategy, so it won't be restricted to a particular market cap category. So it will invest across caps, and therefore it will give you very robust returns with relatively low downside risk.
Right. So that means that long-term investment experience will be really rewarding for the investors. So thank you, Pradeep sir. My next question is to Mr. Rohan. Rohan, what is the investment horizon that an investor should expect while looking at while investing in ITI Value Fund?
Then, in any equity-oriented fund, the mantra is always to keep a horizon of at least 3 to 5 years to ride through the near-term volatility. Our expectation is that an investor should approach with a minimum 3 to 5 years view while investing in this fund. To unlock the hidden value in the stocks that we are buying, it would need at least that kind of a time frame. Back to you, Zain.
Right. So got it. So 3 to 5 years is the minimum time is what the investment horizon any investor who's looking to invest in ITI Value Fund should look at. So going to the closing comments, I would like to first start with our panelist, Mr. Naushad Panjwani. Naushad Panjwani sir, any closing comments, any closing remarks to our partners who are watching us live today at this launch event?
I was so well engrossed in the presentation and the question answers that came in. I am completely satisfied and happy with what the strategy that has been proposed. It was a great to be part of this event, and my compliments to the entire team behind organizing this event also. It was very well organized. I have no doubt in my mind that George and his team will do an excellent job, considering what they have done so far and what they have planned and logical, practical thinking with which they have come out with this new fund. I thank you for inviting me, and I sincerely thank all the ITI mutual fund partners for the immense support, and expect more cooperation in the coming years. Thank you.
Thank you, Naushad sir. Thank you for your continuous support throughout this journey. My next panelist would be Mr. Pankaj Bhuta. Pankaj sir, what would be your closing remarks to all the partners watching us live today?
See, I see a lot of merit in this product, ITI Value Fund, and I congratulate Mr. George as well as whole team for giving insights into the this fund. It will help mutual fund in distributors as well as investors to understand what is the actual worth of the product and what is the intrinsic value, and it can be a very good addition to the portfolio from long term perspective. I enjoyed this event and I wish great success to the full team and believe investors would benefit in the long term. And I
Absolutely.
suggest mutual fund distributors to give wholehearted support to this fund.
Thank you, Pankaj sir, for your continuous support and your precious words. Even we are of the same opinion that we also see a lot of merit, in when it comes to value fund, and we are launching ITI value fund at this particular juncture. Thank you, Pankaj sir, for joining in. My next panelist would be Mr. Sudhir Walia. Sudhir sir, you have been supporting ITI mutual fund right throughout the journey, be it investing in technology, be it any communication or any ease of process for our partners. What would be your closing comments to all the partners who are watching us live today?
I really thank all partners and investors for supporting us for the last 2 years. We will focus on differential product offering, transparency, and good investing experience. ITI Mutual Fund team is committed in all aspects to achieve good results, and I am sure under George's leadership, we will be able to take care of investors' money very carefully and generate good risk-adjusted returns for all our investors. Looking forward to your continued support in coming years.
Thank you, Sudhir sir, for your continued support as well to the entire team of ITI Mutual Fund. I would now like to go to Mr. Pradeep Gokhale. Pradeep sir, what would be your closing remarks to all our partners watching us live today?
So this product is quite unique because the focus is on finding the hidden value in stocks, or where the stocks are very attractively priced. It is coming at a very interesting juncture of the market, as George said. The difference between the narrow rally and the broadening rally that we expect. So therefore, we feel this product should be a core part of portfolio.
That's very correct. Since ITI Value Fund will be unlocking the hidden value, and it should definitely be a part of the investors' portfolio. Now, going on to Mr. Vikas Rathi. Vikas sir, a lot of partners have joined in today, on basis on large numbers. So, sir, as the national sales head of ITI Mutual Fund, what would be your message to all the partners who are watching us live today?
Yeah, Zen, we are all geared up for the launch and highly excited. And our sales team is present across 43 locations. We have planned a few national as well as zonal conference calls with our fund managers to help you solve all your queries. We look forward to your tremendous support in making ITI Value Fund NFO a huge success. I'm sure this I'm sure this product is going to provide three cheers to all our partners in the long run.
That's great, sir. That's great, and we do hope that we receive tremendous support from all our partners across India. My last question, my last closing remark, panelist would be Mr. George Haber Joseph. George, sir, what would be your message to all the partners who are watching us live today?
Today we see a repeat of 2002 to 2007 happening in the world in some degree, whereby all major countries across globe are getting back to growth post the recent pandemic. Inflation is coming back in full swing. Sectors which were not doing well in the last decade have started to come back in the limelight. Cyclical stocks are trading at very cheap valuation across market capitalization, where we see earnings growth to accelerate and valuation multiples to re-rate. Global investment managers are shifting their focus and allocations from developed markets to emerging markets after so many years. This could be a multi-year trend of USD depreciation vis-a-vis Asian currencies, including INR. We see a big opportunity to make money for our investors and expect the India growth story to gain steam in the coming years as corporate earnings growth starts to pick up. Liquidity is plenty at this juncture as money supply growth has been very robust. So our message to all our partners and investors is that please don't miss this excellent opportunity. Next 5 years is going to be really rewarding, is what I strongly believe in, and that is what we have been communicating since October 2019. As per our investment philosophy, we are keen to offer the right products to our investors at the right time, and with that framework, we are very happy to offer ITI Value Fund to all of you at this juncture. Let me thank all our partners for the wonderful support they have extended. And we have been bullish on mid and small cap space from October 2019 onwards. Since then, we have been consistent in our views. We think there are immense value opportunities across market caps and a lot of hidden values to pick up, pick in this fund and create significant returns for our investors.
Thank you, George sir, for your words. Now we'll be moving. Partners, when you leave this event, the key message that we want to leave with you.
Right. So, partners who attended this event, we would want to leave you with a very, few important messages that we covered during this particular event. So, the first message was stick to honest financial advice because it's rare and few. Second one would be value investing has huge potential because it has proven in the Western world as well. Good part about the investment style is that you are buying stocks at very attractive valuations, which are the most relevant part in investing. Number 3 point today was the role of mutual fund distributor or investment advisor is bound to go up disproportionately in the coming years. Mutual fund distributor today have the technology and digital infrastructure to enable transactions and advice on the right asset allocation and right portfolio mix. The distributor community should capitalize on to this advantage and expand their client base. The next point was, as you heard Mr. Sudhir Walia, that at ITI Mutual Fund, we are here in the business for the long run, and we have chosen the path of growing the business, partnering with our esteemed partners. As George sir pointed out, there was immense opportunity available at this juncture, and the opportunity to buy into ITI Value Fund. The team is all set to unlock various hidden value opportunities in the market. So this brings me to the end of this launch event of ITI Value Fund. As George sir said, it's time for your investors to unlock and experience the power of hidden value of stocks. So thank you everyone. Thank you ladies and gentlemen for joining us today. We expect a tremendous support from the entire team, our entire panel distributors across Pan India, and we ensure that we will provide a great experience to your investor in terms of long-term wealth creation. Thank you everyone. Thank you panelists for joining in today. Stay safe and good night.